Members of the private sector and economists have faulted the MPC decision, saying it would lead to fresh job losses and possibly recession. This comes as the Monetary Policy Committee voted in favor of a 400 basis point hike to the benchmark interest rate, pegging it at 22.75% from 18.75%. Well, joining me to speak further on the impact of this decision on businesses is the president of the Association of Small Business Owners of Nigeria, ASBON, Dr. Femi Egbeshola. Thank you, Dr. Femi, for joining me today.
Thank you for having me.
Well, many financial markets players actually saw the hike coming, and we saw a corresponding movement in the stock market, some selling off, there and going to the fixed income markets and all of that. We saw the movement even in the fixed income market in preparation for the hike, and some persons expected as much as 500 basis points. Now, talk to me, was that the case for you and the community you represent? Did you see this coming? Did you prepare in any way for this?
Yes, we saw it coming because it has been speculated over the time that there will be an hike in the MPR rates. But it's difficult for us to prepare for it because of the very high inflation rate that we have at the moment, which is impacting negatively, particularly on the MSMEs and the manufacturing sector. You prepare for an emergency when you have the wherewithal to do so. On our part, it's very difficult to prepare for it. And now that we have that hike, it has impacted and will continue to impact negatively upon us.
Well, I would like to know what your concerns are, because some opine that the monetary policy rate has been ineffective in taming inflation in the country, and based on the fact that the country is not credit-driven. For some other persons, it's more about the unintended effect this could have on businesses. Which of these two bothers you, or are you bothered by both? Dr. Femi, if you can hear me, I'm asking you what your concerns are. There are those who have said the use of MPR really doesn't help in any way to fight inflation, and there are others who are also complaining about the unintended impact this could have on businesses. Some talking about job losses, some talking about, even increase in debts, and some talking about, people not being able to pay back their debts. If you can hear me, I'd like to get your thoughts on this. Which of these two bothers you, or are you bothered by both? All right, so talking about this particular issue, I guess we're having a challenge connecting with our guests. But of course, this is a conversation that has been out there for a long time. People talking about the MPR. For financial markets players, they see it as a good thing because we're looking at having foreign investors come into, the country, and of course having a rate as high as this is something that will encourage them, because at the end of the day you want real returns on your investment. So when you invest in a particular place, you want real returns. But then there is a challenge of the instability in the foreign exchange market, because whatever you gain as interest at the end of the day, you might end up losing it when you look at the foreign exchange pass through and all of that. So these are really concerns that we think should be addressed. And now I guess I have my guest back. Hello, Dr. Femi, if you can hear me, I'd like you to confirm, please. Dr. Femi, if you can hear me, I'd like you to confirm. All right, I guess we just have to wait for him to be able to connect back with us. But of course, still looking at this particular issue, it has become pertinent that we discuss with industry players, especially those in the real sector, so they can tell us how it affects them. Because even the CBN said that while they were making this decision, they thought about output, they thought about growth, and then they also looked at, there are two things we need to consider here, whether it's inflation or it's growth, and they had to settle for inflation, fighting inflation. Dr. Femi, if you can hear me, I'd like you to confirm. Dr. Femi, if you can hear me, I'd like you to confirm.
I can hear you.
All right, so before the internet messed us up, I'd like you to talk on what actually bothers you. I was asking if you're bothered by the fact that, maybe I shouldn't say the fact, by what some persons have said, that NPR hasn't really helped Nigeria to tame inflation. And there are those who are saying that what bothers them the most is the impact this is going to have on the real sector, which you represent. Are you bothered by these two?
Yes, I am. Over the time, we have not seen the very improved effects of MPR rating on inflation. Rather, it has been counterproductive in our own kind of economy. I think the economics here is somehow different from many climes, and what sometimes works in many climes do not actually work here. And talking about this MPR rating, for us in the manufacturing sector and the MSME sector, it has always been very negatively impacting on our businesses. For example, with this new MPR rating, you will discover that it will now be very difficult to be able to access loans from the banks, and it will also lead to more non-performing loans. Already we have a high rate of non-performing loans at the moment, but this hike will actually do more damage to us. We also have to foresee that it will also come to a point whereby consumers will not be able to buy many of our products again, because this increase in interest rates will have to be passed on to the consumers, which will make products and services to become more expensive. And when it is more expensive, it will be difficult for consumers to be able to buy some of these things, particularly now that inflation is in the town and the working capital, the capital or purchasing power is being eroded. That means less patronage of the manufacturing sector. And this will definitely lead to job losses, as you have mentioned earlier. And it will also lead to a number of businesses having to close shop because it will reduce their profitability. It also, in a way, will distract investors from being interested in investing in our businesses, because it is now going to be less profitable. Our accounting books will not be attractive to investors anymore.
All right, I'd like you to speak a bit to, what you just talked about, but this time around, I want you to probably share experiences. I mean, you represent a particular community, and I want to believe your members, talk about these things. Can you speak to us specifically about some of the experiences you're beginning to have or your community is beginning to have?
One immediate experience is the fact that at the moment, you discover that banks don't want to give out loans to MSMEs again. We have a lot of applications in the banks for loans that are rejected day by day. And now that it is more expensive to give out loans to MSMEs, we are going to record more of those experiences. And when we have inflation, our capital has been eroded, we need more funds to be able to operate. And one of the best ways to get funds is to go to the banks for loan. And that is going to be a very Herculean task now. We have other institutions coming to us telling us that the SMEs are not able to pay up their loans and that we should support in recovering these loans. It will be more difficult to also recover some of these loans now, because we have more default when it comes to loans now. And another thing that is going to happen is that we have some MSMEs that are on floating loans. Floating loans means that when we have increase in MPR, the rate of the loan will also increase, that is the interest rates. And when it is difficult for them to pay the old rate, you can imagine how more burdensome it will be to pay the new rate, and that will increase the non-performing loans along the line.
Well, talking about this, I remember there was a time when, while the MPC was increasing or going hawkish on the MPR, on the other hand, or by the sideline, they were also engaging or carrying out what you would call development financing. But that has stopped. What happened? Why did it stop?
Well, at the moment, I really cannot say why we are not having that kind of financing at the moment. But what I know is that the economy has shrunk so much so that a lot of financing has reduced in all sectors and all phases of the economy. In fact, before now, it's easier for us to get or attract venture capital to come and invest in our businesses. But because of our fall in the value of the naira and the inflation rate, nobody is really interested in investing in particularly Nigerian businesses, and more particularly small and medium-sized businesses. And that has been a very big challenge to us. It has impacted in our profitability, and we hope that some form of support or intervention will come from government now to cushion this effect, so that by the time the MPR rating is getting some gains at the other side, we will not also be impactly affected. We will also be able to run our business, grow along with the economy, and continue to support government with the revenue we also generate from our own sector.
Now, I want us to look at the communique that was issued, at the end of the MPC. They acknowledged the trade-off between the pursuit of output growth and taming inflation, but they were convinced that an enduring output expansion is possible only in an environment of low and stable inflation. Now, what do you make of this? Growth apparently became the opportunity forgone, if I can use that terminology. I mean, shouldn't balance be pursued instead?
Yes, there should have been a balance. Well, ordinarily, theoretically, we should expect some growth, but that may not be a short-term benefit. That's a journey. It's going to be a medium, long-term goal. And what we need out in the economy is what is short-term that can actually sustain businesses, by particularly micro and small businesses. And that's why we believe that instead of seeing growth, we may begin to see the other side of it. We may begin to see more companies dying. We may begin to see more joblessness. We may begin to see more people abandoning their businesses to travel or to other countries in the name of Japa. We may also begin to see people abandoning their loans and running away from the existing loans they already have because of their inability to pay. These are not growth. Growth in the economics is different from growth in the streets. While we're talking of the economy, we should also begin to look at the life of the common man on the streets. How does it affect and improve the livelihood and well-being of the common man on the streets? This is also very important. We don't see this happening now. We don't see this positively affecting and impacting the common man on the streets as much as it is not with us in the small, micro, and medium-scale businesses.
All right. What are your demands or recommendations for growth in the real sector, even as the CBN might, keep being hawkish? I mean, in the near term.
Well, we expect that government should be able at this time to fund development finance institutions of government, like Bank of Industry, like Development Bank of Nigeria, like Bank of Agriculture, and the rest, to be able to now lend to the real sector at a reduced interest rate. Government can support such that we have single-digit interest rate on loans from this specialized bank to support the economy and particularly the SMEs. We also expect governments to be able to do some form of intervention fund to support MSMEs. We've had a lot of intervention and palliatives in the pipeline. We've not seen it in reality. We are expecting that it should come and come in good time. This will help us to be able to position our businesses. We'll be able to prepare us for export, and we're able to have enough capital to be able to be competitive with other countries when we begin to export, because competitiveness is also very important. With the rise in the interest rate for loans, it makes us more uncompetitive, and that's not good enough. So government has a lot of role to play if they want to cushion this effect on the MSMEs. While we're having the gains on the other side, we should be able to be thinking about the MSMEs, how to grow them, and the strategic and intentional way government needs to support us now so that we will grow along the other side of the economy.
Well, broadly speaking, I would like us to close on this. Shouldn't our reservations and concerns be directed towards the fiscal authority, seeing that inflation in Nigeria is even driven by, food inflation, imported inflation, and we also see the pass-through effects of the exchange rate, which, of course, the CBN identifies as a major factor, as well as the prices of commodities. I mean, is it enough do you think enough is being done to address these challenges?
Well, at the immediate, we have seen a lot of policy reforms that is, to some extent, bringing some relief, and we're also seeing positive results. And to me, that's a good step in the right direction. We hope that that will be sustained, and at the end of the day, we get to where we want to be. Beyond that, we expect something more pragmatic than what we are already seeing. We expect government to be more pragmatic about fixing infrastructure, particularly power, which is very, very key to MSMEs and manufacturers to be able to bring down inflation. We also expect government to be able to tackle insecurity, which is driving away a lot of people from the farms, with increasing cost of food and bringing about food insecurity and food inflation along the line. These are some of the critical sectors that the government needs to work on. I can speak on and on and on some of these recommendations, but time will fail me.
All right. Thank you so much. Nobody ever has enough time to talk about Nigeria. Thank you, Dr. Femi Egbeshola, for your thoughts on the show today.
Thank you once again for having me. It's a pleasure.
CBN Governor Olayemi Cardoso announced plans to clear the remaining Forex backlogs within a week and a half, emphasizing reforms to address foreign exchange market issues. He spoke during a Nigerian Exchange Group call with foreign investors aimed at strengthening ties between Nigeria's financial sector and the global investment community. Joining me to unpack this is Aziz Lawal, the Managing Director, Trust Bank Assets Management Limited. Thank you, Aziz Lawal, for joining me today.
Good morning. Thank you so much for having me.
Well, let's begin with the occasion. Speak to the expected impact of this foreign portfolio investor call, and if you're confident, we'll start seeing them, in good numbers.
Yeah, thank you so much. The good thing is that expressing my confidence on the back of the call made yesterday to foreign investors. I can conveniently rely on what we've seen in the past. Particularly when the Syrian governor spoke extensively on Arise TV, right? Those communication in the past, we've seen subsequently foreign investors relying on them and taking comfort from his words and coming into Nigeria. Like he mentioned himself, that foreign investors inflows declined to 3 billion last year, but already this year we have received 2 billion. So on the back of that, I'm very confident that we'll see foreign investors take more comfort in coming into Nigeria and start coming in the coming weeks and months. Thank you.
I like that you made reference to data. Still looking at that same data, January 2024 saw a decline in foreign investors' purchases of Nigerian stocks, and that was by approximately 9.7%. And we also saw investments dropping to 15.48 billion naira from 17.48 billion naira in December 2023. Now, this occurred despite a series of reforms aimed at attracting and keeping foreign investors. You've also talked about certain other things, that have been done. So what do you attribute this to?
Yeah, thank you. Interesting question, really. But the thing with equity investment is the fact that unlike other investments that usually love moving parts, aside from the country fundamentals, there's not specific company fundamentals. But before going to that, I would like to address this from the angle of share of the market. So a lot of the time when we analyze the composition or the share of foreign investors in the trades consummated on the Nigerian Stock Exchange, we compare it to the locals, right? So typically, when locals step up their game in terms of taking more share, definitely the share of local investors will drop. So it's not necessarily because they are not coming, but the fact that local investors are taking more, really. And we have seen that, PFAs and other institutional investors have stepped up their game in terms of taking up shares in the local market significantly. That's on the one side. Then on the second side, again, as a foreign investor, where I'm trying to come into a water that I'm not very sure, right? And I just want to test the water. I would rather start with fixed income instruments where I know that's come. If I go and buy a OMO instrument or fixed income instrument or treasury bills, and know I'm going to get a certain fixed amount over a specified period of time, rather than come into the equity market where I'm not sure that I may even recover my principal. That said, we expect that on the back of the call made yesterday, don't forget that a call was coordinated by the NGX, right? So on the back of that call, we expect that in the coming weeks, that foreign investors will begin to take position in Nigerian equities market, particularly banks that their dividend season is just around the corner. Thank you.
I like what you said, particularly because, the dividend season is around the corner, and that would spur anybody to want to play and, get that and then move on. But many have actually blamed. Were you saying something to me?
No.
All right.
Say very well.
Okay. Now, many have blamed most of Nigeria's economic challenges on the volatility of the foreign exchange market and, of course, insecurity, among other things. Interestingly, CBN seems determined to bring sanity and some form of stability to the market. And then we've seen so many circulars being issued in the past 8 weeks. And now the governor just talked about, clearing more backlogs. Would you say these moves have been able to bring that sort of stability or efficiency that we're looking forward to in the foreign exchange market in Nigeria? Are we beginning to see that?
Stability. Thank you for that question. Stability and I think Mr. Cardoso has mentioned stability, has used the word stability more than any word, right? In the last 4 to 5 months, right? Because it's not really about the pricing, really. Even if the naira is going to exchange for 2,000 naira, right? If I can be sure that if I buy the naira today at 2,000 naira, if I come 6 months from now, the naira will still be doing 2,001 naira or 1999, like that's some stability, right? So it's not necessarily repricing. So that's why, I mean, there's always that emphasis of stability. Talking about stability in the last, in the last, in the last 60 days, I mean, if you judge the movement of the naira in the last 60 days, then you can't talk about stability, right? But what also has been observed outside all the circulars is the fact that there have been made a lot of distortions that you now don't kind of know the character of the market, right? So you need to address those distortions. And the CBN has taken significant steps to address some of those distortions, right? We saw from the way they treated Binance, right, and also how they treated the BDC, the local BDC operators on the streets, right, to kind of address the distortions where we know that if the naira is being sold at 1.5, that is the value of the naira. If the naira is being sold at 1.19, we know that's the fair value of the naira. Not that there are some individuals behind trying to walk around the value of the naira in their own to take advantage of it, right? So in terms of stability, some of the policies, some of the moves being taken to address those distortions, they've been very positive. I mean, this time last week, maybe the naira was trading as high as 1.930, right? I mean, currently now back to 1.5. So you can tell that whatever took you to those levels definitely was not ordinary. It's what you can attribute to distortions. We only hope that the moves of the CBN and the circulars to take care of transparency will further stabilize the naira going forward. Thank you.
I like how you also emphasized stability. I think that's like the word right now. A lot of persons or a lot of analysts will tell you they don't necessarily care about how much it exchanges, but what they want is stability, forgetting that we have people in the real sector who are interested in how much it's exchanged for, because at the end of the day, it will affect the price of bread. It will affect the price of rice. It will affect the price of cement. It will affect the price of so many things at the end of the day. So I hope that as we are trying to achieve this stability, we're also thinking about the real sector. We're also thinking about the ordinary Nigerian.
Yes, I mean, definitely. The pricing, again, if it is priced higher, definitely the cost of things will be higher, staple foods, materials. I mean, a lot of things will be higher, right? But government revenue also will be very high, right? It's going to reflect that pricing. So it's now the responsibility of government to make sure that that surplus gets to the people in terms of intervention, where you know that at the company, for example, you're going to get intervention from the government, maybe cheaper loans. On the back of that, you know that your funding costs will go down, even though your cost of materials will go up because of the pricing of the naira. But you know that your funding costs will go down because government are intervened with cheaper funds, right? So these are supposed to kind of provide some kind of balancing effect. If government also channels those surplus funds to addressing critical infrastructure, taking care of insecurity, this should address some of the challenges that we have. So again, if I'm sure if you go on the streets and those interventions, they trickle down, people will not really be bothered about the fact that, yeah, okay, they were buying bread 500 naira last year, but now it's now 700 naira. They will not be bothered about it the way they will be concerned about the fact that today it is 700 naira, next it is 750, 2 weeks after it's 7. That uncertainty gets to people more than actual prices eventually, particularly if government intervenes and it gets to the people the way it's supposed to. Thank you.
All right, so let's talk about the Forex backlog now, because that was something he mentioned there. So talk to me, how far-reaching is the clearing of the Forex backlog, which, going by estimates of the publicized clearance, puts the remaining backlog in the region of $1.8 billion. How far-reaching do you think that clearing of backlog is?
Yes. I mean, since Mr. Cardoso had made that very clear, that, I mean, we can't be talking about transparency without actually being committed to that transparency in terms of addressing proven backlogs, right? And they have showed that, they have demonstrated that over time, right, where we've seen that they've cleared as much as 2 billion, right? And he also mentioned that, I mean, they cleared another $400 million last week, right? So leaving the net balance around 1.8 billion. And he made mention yesterday that, I mean, declaring that outstanding is only a matter of days, which is 1.8 billion, is only a matter of days away. And based on what he has said in the past and the action that has followed, we expect that will happen. So we are positive. I think a lot of those investors are actually positive, right? That if the CBN governor is committed to clearing those backlogs, as long as they are valid backlogs, which has been established. That's we have done the audit. We have established the backlogs are valid, and we're going to clear them over time. And it specifically mentioned that yesterday that is only a matter of days. Thank you.
All right, I think we should just close on this, and that's the fact that for some analysts, they see these recent moves as more administrative than structural. Apart from clearing the backlogs, which of course we know why not just call that administrative, what other actions do you think the CBN should take to address the lack of supply of foreign currency in the country? Now, I want to leave this open, not just to the CBN, let's say maybe the government, and looking at the fact that most of these actions are only addressing the demand side rather than the supply side, which is more effective and even more enduring when it is, attended to. Speak to this, please.
Yeah, thank you. Interestingly, majority of the supply side, right, is going to come from the more of the fiscal side, right, where it's not like a kind of an obligation or responsibility of the CBN, really, because if you're talking about supply now, you're talking about, I mean, doing basic, the lowest angle fruit when asked to do supply, the lowest historically is as just jack up your daily oil production. Is the lowest hanging fruit, right? I mean, we are talking about a country that used to average 2.2 million barrels per day before. Yeah, even if you just step up from 1.5 to 1.8, it's going to significantly boost supply, and that is more on the fiscal side, right? Not really the responsibility of the CBN. The only thing is that CBN is trying to be efficient in managing that supply, in the sense that the account of the MPC is now with the CBN. Where we know that this money is coming, they are coming directly to the CBN, right? So that's one side. There's also the low hanging fruits of catering to creatives, right? Like the Minister for Digital Economy, he's done a lot. He said a lot. The government should prioritize that, double down, and support his effort, particularly around creatives. We want to see more Nigerians doing skits. We want to see more Nigerians. Nigeria's music is now a global. It's now at that level where it is accepted globally. Let's send out more musicians. Let's get those very low hanging fruits where you know that you are taking care of youth employment, you are taking care of youth restlessness, and you are also bringing in FX. The low hanging fruits will really address those supplies. It's because what CBN really can do is more of ensure transparency, discipline, effective transmission of policy, and ensure that there are enough regulations that will ensure that everybody is playing within the same rules in the markets. On addressing supplies more of to the fiscal side, and we hope that government can take care of those low hanging fruits very, very quickly. Thank you.
All right, and maybe agriculture, exporting, and all of that. Well, thank you so much, Aziz Lawal, MD Trust Bank.
Yeah, thank you so much for having me. Thank you so much.